We start today's market talk. Nothing too good or too bad stays that way forever because great times plant the seeds of their own destruction through complacency and leverage, and bad times plant the seeds of their own turnaround through opportunity and panic driven problem solving. And we have seen this time that as the consumption growth and the economy slowed down, the government moved around quickly and have given a stimulus to consumption in the budget, and RBI has cut the rates. So focus on things that won't change instead of things which are not under your control. Ignore the daily noise. Look for underlying trends shaping the future. This lets you cut through the clutter and make clear, informed decisions. An entry price significantly impacts long term returns even for quality companies. Market outlook. RBI finally delivered a rate cut. So, with the economy set to slow to a 4 year low, RBI finally delivered a rate cut by cutting benchmark rates by 25 basis points to spur growth, but retained a neutral stance. However, RBI deferred the implementation of liquidity coverage ratio and project financing norms by the year. So bank stock tumbled as the policy fell short of expectations of liquidity measures. Focus of Indian monetary policy has clearly shifted to supporting growth now. So MPC revised GDP growth for Q1 FY26 to 6.7% from 6.9% earlier, and for Q2 FY26 from 7.3 to 7%. Budget with its conservative capital expenditure projections has left a vacuum that monetary policy now needs to fill. But the real question is whether the banks will respond to RBI cues and pass on the benefit to borrowers. Fears of a global trade war are rife, and Trump administration has declared an economic and financial war on any country that doesn't do what it wants. For the markets, the issue is how to deal with the volatility and uncertainty with policy changing on almost daily basis. Safe haven gold has climbed to another all-time high, but you cannot be too bearish also, given the market's rapid reversal this week. Fact that moves are less extreme than expected. But Bitcoin has offered less protection and is down this week, despite expectations that Trump would be supportive to the sector. Now, result season has improved with time, with the likes of Airtel and Mahindra delivering better than expected numbers. But others like Trent, despite strong operational performance, corrected post results amid a pause in earnings upgrade cycle and high valuations due to slowdown in discretionary consumption against a higher base. Now, coming to US markets, Trump dominated headlines with tariff moves. As Canada and Mexico showed willingness to work with Trump, he delayed the implementation of tariffs. He approved 10% tariffs on Chinese goods, and China responded with own duties on multiple American products. Results of Amazon, Google, and AMD were below expectations. January non-farm payroll report showed a moderation in job growth, but an expected downtick in unemployment. Now, if you come to the dollar index corrected last week, roughly around 0.37%. It had gone up to 110 based on the news of additional tariffs. But once that news was negated, it quickly went down, tested the 50% retracement level of 107 odd, and then closed at somewhere around 108 levels. So it's now clearly in a downtrend. But the USD INR was working at divergence with respect to the dollar index, and it was up 1.25% last week, made a fresh low of 87.59. US bond yields have come and taken support at 61% retracement of the fall. So this is a very critical level, 4.5. Uh, it can rise from here or fall from here based on the news flow and the policy actions by the Trump administration. Brent crude corrected roughly 2.27% as expectations are that there will be more supply and lesser problems in Middle East and greater supply from Russia, etc. Gold, as part of safe haven buying, made a fresh high and is now was up 2.24% last week. So it's in a clear upward trajectory. Copper also was up 6.48%, basically based on the dollar uh, weakness. So the metals perform better now. As if the dollar weakens, then the metals always outperform. But we'll have to watch this thing very carefully now. Bitcoin US dollar, it corrected around 1% or so. It was all over the place, went above 100,000 and then corrected and came down to around 91,000 also, the low it made. So we'll have to watch this, but it's pretty volatile now. Nasdaq was up 0.06%. So results, some of the results were bad, but then it had rebounded and it's above the 20 EMA, so that is okay. Similarly, with the Dow Jones, it was up around 0.54%. So it made a kind of a doji, but it is not corrected. And it tested that up level of 45,000, so which is its all-time high uh, last week. So based on now results and other issues, it can move in any direction from here. Uh, Now coming to India VIX. See, last week was ruled by budget expectations, and this week was ruled by the Trump tariffs and RBI policy. So Monday was a gap down in response to tariffs from Trump, but but impact of tariff action was digested by the market swiftly, and a good revival began from Tuesday. But the rate cut rally couldn't sustain. So if you see in response, with since all events are over, India VIX has declined to around 13.68 levels. So it is headed lower now because the volatility is lower. So premiums will decline now. Coming to Nifty as such. So if you see, Nifty if you see the Nifty retracement from the highs to the lows it had made at around 22,800. So it rebounded roughly 23.6% of the complete fall. But it was expected to go up, but it retraced this week from the 20 EMA on the weekly charts. But the next logical target should be this 24,124 level, which is the 38% retracement. On the daily charts, it has to negotiate this declining trend line. And though from the lows, it is making a higher highs and higher lows. So from here, it can take support at the 20 EMA, which is at around the 23,440 odd, and then move up from here up to the 24,200 odd level, which is the likely target, as I gave you also about the 38% retracement. On the hourly chart, there was a gap down on Monday, but then buying came, and then it went up throughout the week, and then at end of the week after the rate cut, there was a big decline, and then it has come down to below the 23,500 odd levels. So then it rebounded back at end of the day. So we'll have to watch this space right now. So prices went towards 23,800 and witnessed some profit taking at end of the week. So as I told you, the first target has to be 24,125. So the pullback is going on. But if you see on the worst case scenario, this 1,000 point rally, which took place from 22,800 to 23,800, can retrace to 50%, that is 23,300, or 61% to 23,200. If support holds, then we have to continue with long positions or create fresh long positions. Now, the strong sector was Nifty Metals. It was up 2.66% last week. It is outperforming with respect to other sectoral indices. It can move higher to touch the upper declining trend line here. So there is some move still possible, and I showed you as copper index also. They are also it has also had a good uptick last week. Uh, Next, we come to Nifty Bank. Now, Nifty Bank, if you see here, uh, from it is above the neckline of the head and shoulder pattern, and it had a bullish candle on the weekly chart, second bullish candle from the lows it had made, but this had a longer upper shadow, so indicates unwinding at high level. If you come to the daily charts, it has bounced from the declining trend line, and it felt resistance at around this 50,600 level. So this support of 50,000 is critical. So if till the time it is above this 20 EMA, it is okay, and it can then go up. But the rate cuts is negative for bank, and that is why it corrected uh, roughly 0.44% on Friday from the high it had made. HDFC Bank was strong, and this is a weekly chart, so it was up 2.47%. It has bounced back from the lows. Now it is above 20 EMA, so this is showing strength. Reliance has taken support at the 200 EMA on the weekly charts. So it has to go above this 1300 level to show some strength. Otherwise, it will just remain range bound. Nifty Midcap index was nearly flat. It is still below the that neckline which is here. So it has to cross this for some strength. Similarly, with the small cap index, it has to go above this neckline. Otherwise, it was just around flat and all. So though it didn't correct much last week, but then it has to go above this, and then only some strength would be visible. Now I'll cover three stocks. First is Paradeep Phosphates. During third quarter FY25, sales were up 58% year on year. Overall volume manufactured traded surged 47%, 32%, and 212% year on year. 9 months, 13, 8, and 60%. Volume growth was fueled by strong demand on the back of good Rabi season, aided by higher reservoir levels as well as entry into newer markets like North India, because they are basically a South India based company. Capacity utilization was at 90% versus 72% year on year, aided by strong production at both Paradeep and Goa facilities. It has maintained its EBITDA per metric ton guidance of 4,500 to 5,000 metric ton for FY25. Its newly launched products witnessed good traction with the sales of nano fertilizers, DAP, that is diammonium phosphate, and urea at 1.4 million bottles, and a sale of 5418 to 128 million metric tons of triple super phosphate TSP, up 50% Q on Q. It has completed the first phase of its energy saving initiative at the Goa plant, which is expected to provide cost saving from fourth quarter onwards. Further, it is planning to incur 180 crore in energy efficiency related projects with an expected return on investment of 25%. Merger with Mangalore Chemicals will enable it to achieve a higher pan-India market share, synergies, and stronger brand recall. Now, coming to their P&L, if you see here, the revenue this quarter was up 58%, and for 9 months, it was up 10%. Gross profit was up 28% because the margins had declined year on year. Uh, EBITDA was up 19%, and EBITDA margin had also declined. Though in absolute value, the EBITDA was up for 9 months was up 81%, and the margins were also higher. Profit after tax was up 45%, uh, and up 397% year on year, with the EPS of approximately 1.9 for 1 rupee 90 paisa for third quarter, higher by 45.7%, and for 9 months it was around 4.8 rupees. So it should do around roughly 6 to 6.5 rupees for this year. Now, after merger, It should do roughly around 17,350 crore revenue in FY26 with a profit of around 783 crore and a EPS of roughly around 7.6 and FY27 8.9. So considering a mean of around 8 rupees, it can easily trade at 15 times. So if you see the chart, it has declined and has taken support at 100 EMA. At somewhere around closer to 95 levels, uh, it should provide a decent opportunity. It is merging with Bangalore Chemicals and Fertilizers Limited. Merger ratio is 187 to 100. This means that for under every 100 equity shares of Mangalore Chemicals, shareholders will receive 187 equity shares of uh, Paradeep Phosphate. And so there is arbitrage here, opportunity. If you see here, this is 167 rupees right now, Mangalore Chemicals. So, that is 105 rupees PPL. So there is an arbitrage of around 25 rupees here, uh, which is being played out, but that is being covered by the Paradeep phosphate prices going up. So we'll have to see this. This merger is likely to be completed in April 25. Next stock is Trent. After delivering strong double-digit like-for-like growth and aggressive store addition, the base is becoming high for Trent, resulting in moderation of growth momentum. Like-for-like sales is same as same-store sales. Fashion concepts delivered like-for-like growth in high single digits during the quarter. Notably, emerging categories like beauty and personal care, innerwear, and home continue to witness strong traction. These now contribute over 20% of standalone revenue, similar to second quarter FY24. Westside's year-to-date online revenue grew 45% and now contributes to over 6% of Westside's revenue, while Zudio has maintained strong presence with slight growth moderation. Star Bazaar, which has now has 74 stores, recorded a revenue growth of 25% year-on-year during the quarter, largely driven by double-digit like-for-like growth. This was led by own brand staples, fresh and general merchandise offering. So they have basically four fashion concepts stores: Westside, which is for branded fashion apparels, footwear; Zudio, which is a value fashion store; Utsa, which is basically women's lifestyle products; and Samo, which is premium and occasional wear item, which is the top end stuff. For others, they have Star Bazaar, which is FMCG staples and fresh, and Booker, which is cash and carry wholesale stuff which is sold there. They added gross 62 Zudio stores, uh, and net additions of 58 stores, taking the total store count to 635. For West Side, the company opened 14 stores while it closed two with a total store count of 238. So company is rationalizing and consolidating its existing stores. Company now has a portfolio of 907 fashion stores. Coming to their P&L, the sales were up 36%. For for the full year, it was up 43%. 9 months, it was up 43%. So that means the sales growth is moderating. Gross profit was up for 33% because the margins have declined. Here, the gross profit for 9 months is up 43%. So that means the margins are declining now. Uh, Employee cost is up, rent is higher, which is resulting in EBITDA going up only 34%, while for 9 months it is up 44%. Interest expenses are coming down, so which helped the PAT, profit after tax, to go up 36%. And for 9 months, it is up 58%. Now for FY26, it is expected to do around 22,552 crore of net revenue, with a decent revenue growth now, which is coming from 40 and 50% down to around 30 odd percent. And PAT growth of will come to around 40% CAGR. ROE, etc., are improving. Asset turnover is also coming down. EBITDA margin, though it is improving, as their costs are controlled and debt is reduced. So they are expected to do around 68 FY20 EPS in FY26 and 93 in FY27, taking a mean of around 80 At 50 times, it comes to around 4,000, and 60 times it comes to around 4,800. That should be a decent level. Now, this stock, you see here the chart, this is a weekly chart. It had moved from around 1,000 level in March 23, moved up to 8,350 odd, and then it has corrected. So it has retraced now roughly 38% from the top and can retrace more because the it corrected 11% after the results last week. So first stop should be that 50%, that is 4,750 or 3,900, 61%. But this 4,000 level should be a decent level to get this stock where there is some margin of safety. It has declined with large volume, so that should be a cause for worry. Last stock today is Skipper. The 9.1 lakh crore capex over 23-32 as per National Electricity Plan uh, through partnership agreement through Power Grid, etc., on their own balance sheet will continue to drive growth for this its engineering division. The export market, led by the transition towards our renewable energy and carbon neutrality, offers a broad scope for growth. The demand outlook is strong and it already has a strong bid pipeline of 18,000 to 20,000 crore. As of December 24, the order book is at 6,354 crore. Due to capacity constraint, the company is not taking in orders aggressively as it is already booked for the next 2 years. They are roughly doing around 4,000 to 4,500 crore of revenue per year, around 1,000 odd crore per quarter. So they are okay for at least with this order book for roughly 1 year. Capacity expansion remains critical as currently its engineering capacity at 300 kiloton is already operating at 85% utilization. The first plan of 75 kiloton capacity addition, which would add 700 crore to the top line, will now come online by first quarter FY26 as against the earlier target of fourth quarter FY25. The second 75 kiloton capacity post first 75 kiloton capacity addition, which was targeted to go online by end of FY26, is still at the pre-approval stage. So the future earnings are doubtful, and that is the reason why the stock is correcting. Timely capacity additions remains critical for the company for top line growth and gain market share. It has commenced the development of specialized capabilities in substation EPC fieldwork. It has won one project under the Kavach and expects to win more projects in the future. It is making towers for the Kavach. The management expects its addressable market size for this opportunity to be 50,000 crore. Polymer segment is operating at low capacity utilization. It is impacted by destocking by channel due to price volatility and slowdown in water products like Jal Jeevan Mission. If you see their quarterly results, revenue was up 42% year on year, better than estimates. Direct expenditure, though up, was up 71%, and gross profit came down 11%. Other expenses, though, declined. Hence, the EBITDA was up 44%. The profit before tax was up 83% as certain costs have come down. And profit after tax was up 76%. And EBITDA margins have improved by around 16 basis points, but still below the consensus level. Now, for FY25, they are expected to do around 4,449 crore. That is achievable, and they should do a EPS of around 12.4. That is expectation. But if the capacity is not increased, then these targets for next year look slightly doubtful. So, keeping a mean of around 18 odd for FY26, FY27 based on progress. Uh, at around 25 times at around 400, it should get fully priced. Now, it is the sales growth is moderating, so it is coming to now 15-20%. EBITDA growth around 20%, and EBITDA margins are expected to be 10.5, but that will only come if there is an operating leverage. ROE, etc., are improving, return on investment also, and debt to equity is also coming down. Now, if you see here, this stock has corrected and around a declining trend line and then has bounced back from there. So somewhere around these 450 or 400 levels is a decent level to get this stock, because despite decent results, the stock didn't really go up because basically due to the capacity constraints. So I have finished. We will take questions now.